Good morning and welcome to the Australian Stock Reports online morning update for the 27th of September 2012. Global markets extended their slump overnight amid growing fears over Spain and its mounting debt problems. The S&P 500's fifth consecutive decline marked its longest losing stretch since July, with last night's fall coming amid violent demonstrations in Spain where the nation's PM is trying to push through harsh austerity measures. The protests coincided with comments from Germany which poured cold water on the European Stability Mechanism, assuming full responsibility for Spain's banking recapitalisation. There was also downbeat economic developments in the US, where new home sales surprisingly fell in August, leading to sharp falls in home builder shares. Oil was the big mover in commodity markets, sliding below $90 a barrel on fears Europe's debt problems will hamper global energy demand. Other commodities were swept up in the sell-off, with base and precious metals weighed down by the stronger US dollar and concerns over the effectiveness of central bank stimulus. The euro slid against most of its major rivals, touching a two-week low against the greenback as Spanish bond yields surged on the back of the nation's protests. Overnight, the SPY tumbled alongside retreating US markets, hitting a low around 43.40. The index managed a small bounce in late in the American session, but looks set to turn lower again in line with a broader downtrend. Following the negative offshore leads, the Aussie market is likely to open around 15 points weaker later this morning. In this morning's report, we maintain our long bias in Hong Kong whilst we shift back to a neutral bias in Japan, whilst in the Australian equity section we have a long bias trading idea on Telstra. That wraps up the Australian Stock Report morning update. Thank you for listening.